Alright, so moving on with chapter 9, which is return journals. I've already given you the brief about it. So basically we have return journals of purchase return journal and sales return journal. These are from last chapter, right? I gave you the notes. So this was the journal, this was the journal. One journal was this Cashbook. We had petty Cashbook, which we did not look into right now. I think I will explain you this one later on. Okay, so now we are going to have look at this and this. Okay, so just like this one and this one, this is also including trade payables. So this one include trade payable, this one include trade receivables. Okay, now what happened when it include trade payable is that it's on the opposite side. If purchase is an expense, right, purchase return is not. It's opposite of expense, which is income. So if sales return is income, sales return is not, it becomes more like an expense. So it means you sell something, then the customer returns you something. Okay, it's not actually an expense, and this one is not actually an income. So what happen is, it is just that we have to minus that amount back in order to make sure we settle the amount. Okay, so this was the purchase journal. Okay, and this is how it looks like. So purchase return journal also looks like this, but the difference in that, you, instead of having invoice number, you will have credit note number. Now what is credit note number? There are two notes. There are credit note and there is debit note. Okay, so if someone want to return something, they have to issue credit note. First the customer will ask for debit note, and then the supplier will issue credit note, depending on if we are the supplier or we are the customer. Okay, then this is how same we are going to record it, but let me just open the book and get any example from it. So if we are on chapter 9, page 78. Okay, just as a highlight, you have to know these terms. Okay, so debit note is something like, if you want to return something, you have to fill one form. If you have bought something from Lazada or Shopee, if you have experience, usually they will ask you to fill in something. Okay, they will ask you the reason, and then they will ask you, this is the amount we will be returning, and then they will notify, and then they will proceed with it, right? So basically, as a customer, you have you ask for debit note, you give them debit note, and they issue the credit note. Okay, okay, if you have book, you can look on page 78. There might be some background noise, it's raining. Okay, let me know if the voice is not clear. Maybe I can make another video later on and explain you, or maybe if we will be having class on Sunday, physical class, so you can just let me know if you have any problem. Okay, I will try to speak louder. So if you look on page 78, they have given you the example of how the credit note looks like and how the purchase return journal looks like. So you have date, you have detail. Okay, but instead of invoice number, you have credit note number. Now it does not, most of the time debit note does not matter, credit note matters, because credit note is like assurance that the sale or purchase return was accepted. Okay, So if you send a debit note, if there is no credit note, that means it's kind of useless. Okay, you cannot write over here, you did not return the goods. You need to have credit note. So you will have the items like this, and then you can transfer them to the journal. So this one will not be purchase journal, this is going to become purchase return journal. Okay, and this will no longer be sales journal, this will become sales return journal. Okay, now this one will stay like this. Now instead we have purchase here, right? And this is the purchase return journal. Let's say return goods for 200, this one maybe 100, this one 20, this one 10. What I am going to do is write the total here, right? Purchase return journal in purchase return ledger, which is under general ledger. Okay, and I will go into their accounts, and minus this amount. Okay, when I minus it, if purchase is an expense, right, it means debit purchase and credit trade payable, which is Bell in this case, right? So credit him, right? Purchase return is going to be trade payable debit, because we will receive the money from him and we give him purchase return. Okay, so purchase return is going to be, if this is purchase is on this side, purchase return is going to be on this side. Okay, purchase return journal. Okay, so not on this side, on this side. So you see, I have to debit here and I have to credit my this amount. I am going to write here purchase return journal or ledger or account. Okay, how much is it? It's 200. How much is for Aldo? Aldo is 20. So I will write here 20 purchase return. Okay, now in order to have purchase return, I need to have purchase. Okay, I think I have raised it, but I need to have purchase. It means if I buy something, then only I can return that thing, right? Does not make sense that I am returning something I did not buy from someone, right? So this is the concept of purchase journal. It's going to become purchase return, right? Okay, still we are dealing with trade payables, but opposite side we are returning them. And two things you have to know are these. After that, journal. So all these entries we do, right, are actually called journal. There are two types of journals. One is called specific journal, which are these, and one is called general journal. Okay, I know we have general journal here also, but this general journal means if something is not falling here, you put it here, right? But one is specific journal, where you put everything related to in that account, and one is general journal. What is that? I will copy this, I will go here and I will paste. So general journal okay, now the one I am explaining you right now, right, is from this one, is this one. So from this category, I told you we have two types of journal. One is specific and then the one is okay. So what we do here, how is it different from normal journal? So we will have date, detail, here debit, and here credit. You can have, in some cases you can have balance here also, okay, but no need for now. So what happen is, you will write a date here, for example 1st January, and then debit and credit. I gave you example here. The amounts that will go in journal are, for example, selling assets or disposing assets, are like buying something on credit, buying assets on credit, okay, which are going to be other payables, and which one, commission receivable, okay. So examples like this will go in here. Example, we sell our asset, we sell our equipment, so we sell our equipment and receive, we will receive later, so other receivable and equipment. So our equipment go out, for example 2000, and we will receive the money later. Not this one, this one, okay. So we will receive the money later. When we will receive the money, this entry will go in cash book, okay. Another example, 2nd January, we receive discount, okay, we are entitled to discount, or we can say we are supposed to pay interest. Interest can be, yes, interest I think can be. So if we are supposed to pay interest, what happen is, we will write here expense, interest, and here interest payable. Let's say it's 200, change the figure, 380, not here, 380. Okay, so we have to pay interest 380, and we will debit our expense in income statement 380, okay. So these are the example of general journal, but this general journal is under this category, okay, under this category. But what does this mean? This general journal means you don't have all these accounts. You know, I always do this, debit and credit, debit and credit. This is called general journal. This one, not this one, two different things, okay. So when I debit and credit everything, right, that is general journal. Actually I told you I cannot do like this, right? I can, if I were to make the general journal, I cannot do this, I cannot make this transaction here. Actually, you see, I cannot debit and credit. I should actually put purchase into, I should put purchase, credit purchase into purchase journal, and purchase return into purchase return journal. But when I do this, it means it's easier for me to understand what is debit and what is credit, and this is a concept of this one. So remember, this journal and this journal is different. So this one is the thing I always do, debit and credit, but this one is specific. If you are following the book, then you should do this. This is just for understanding. Usually I want to understand it, I just want to do things fast, you know, it's not required, journal is not required, maybe ledger is required, so I just do it fastly. But what is debit and credit for my own understanding, okay. Then cashbook. Cashbook is also a normal account of cash, okay, which is the next chapter. I will explain you more in detail what is cashbook. So anything on cash, you have cashbook. So you have detail here, and then you have amount, then you have detail, then you have amount. Now cashbook you have not like this, Then Cashbook will get in detail like this. 1 2 3 1 2 3, yes. Bottom, where you will have, so Cashbook, here you will have bank column and then cash column. Here also you will have bank column and cash column. Here you will have retail. So basically that specifies that whether you are paying through cash or whether you are paying through bank. Okay, so let's say if you buy something, buy on cash, right? If you buy candles on cash, so what you will do is debit candles and credit cash, right? And then, so credit cash, so it means credit is this side. I will write here in retail candles. Now I'm paying through bank or cash. I'm paying through cash, let's say $50. So here, so let's say it was bank, so I don't put anything here, I put 50 here. So that is called cash book. Again it will become more larger by adding a discount column here. I will explain you that in next class, but that's all for today. Rehearse this thing, do chapter question 6 and 8, 6 and 8, and I will see you on Sunday. Okay, Sunday we'll be having physical class. I think I have already told you.